Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of October 9th through October 13th, where we'll try to help you make money trading in October. We'll talk about how the markets typically perform in the month of October, what sectors and industries typically perform well in the month of October, and additional strategies and trade ideas to help you make money trading in October. So thank you again for joining us. Good morning, Brian Moritz, Walter Lyons, Ricky Khan, Easy Mike. Thank you all for joining us in the live chat today. Hope you all are doing well and hope you had a good trading week last week. So again, here's our Google document with our notes for part one of our weekly trading game plan for the week of October 9th through October 13th. We keep our notes for our weekly trading game plans in publicly accessible Google documents, so you can refer back to these notes. We have links to bonus videos, the tools and resources we use for our market analysis, our strategies, etc. here in our notes documents. We keep our notes documents for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks. And again, you can find a direct link to this Google Drive folder in the description box below. So we'll start out, we'll see how the indices and how the markets ended up on Friday. It's kind of an interesting day on Friday after we got the jobs data. We had an initial decline, and then around lunchtime, we got a rebound. So all the indices ended up in the positive, pretty strong correction rebound there on Friday. So again, all of the indices ended up. NASDAQ outperformed at 1.6% up, and the S&P up almost 1.2%. And then we got a little bit of a dip right at the close end of day. So we had 66% advancing, only 30% declining, but we only had 9% new highs and 91% new lows. Have still only 17%, 18% above the 50-day moving average, 82% below, and only 30% above the 200-day moving average, 69% below. So a lot of weakness under the covers. Again, you'll see the mega cap tech, the FANG stocks were the ones, leading the charge, pushing the NASDAQ, pushing the S&P. So particularly these large mega cap techs, Apple, Microsoft, Google, NVIDIA, all had significant gains. And again, I think that's contributing to the majority of the indices improving, because again, we see quite a bit of weakness under the covers, and the bull bear was pretty 50-50 throughout the day. Recent news: refused to break in week of Treasury turmoil. We'll look at the Treasury curve. Economy remains stronger. We'll see that in some of the economic data. Holding a lot of cash, expecting a crash. We'll talk about the October effect and some of the why you shouldn't fear the October effect. So we saw oil significantly break down. It broke down through the 85 support level, down below 85, down to as low as the low 82s. I may have even touched near 80. So right now we've got oil support at 80, resistance at 85. So that was a pretty severe drop in oil. Natural gas pushed up above 3, had a run up to the 330 levels. So again, we'll see that trend upward in natural gas. Gold and silver had been beaten down pretty severely with the strong dollar. Gold and more so silver, we'll see, had a rebound late in the week. And so we'll see we've got some resistance at 1850 and support in around 1820, I believe. So we see right now the futures are all pointing positive. The dollar was very strong, 106, 107 DXY, but the euro did make somewhat of a recovery later in the day. The Japanese yen's been very weak. It broke above 150 US dollars to Japanese yen and then declined slightly. This is interesting, as this part of the yield curve is now, the inversion is gone. It's de-inverted. It's no longer inverted. So at least the longer end of the yield curve and bonds is no longer inverted. Although we saw, pretty strong push up in bonds throughout the week. There was a short reprieve, I think, on Thursday, but this is interesting. I guess the short end of the curve is still inverted, so we may see a further push up in the long end of the bonds. So again, I'm not sure that the yield has peaked out. The prices in bonds, TLT, etc., has hit bottom yet. And again, we have the Fed interest rate decision at the end of the month, as we'll see. And my personal expectation is they may well raise interest rates a quarter come the end of October. Welcome, MD. Thank you for joining us. Hope you're doing well. So if we look at the SPY, S&P 500, again, we see pretty good support around that 420, bounced off. It's still below that lower trend line from the previous trend. We see that gap down. So again, we've got pretty good resistance up there in the mid 430s, low 430s. So if we do get a rally, I would expect a correction back off that trend line. Again, we can see that pretty severe drop. See a tail back down, still sitting above its longer term 200-week moving average. So, we still got some downward potential between these moving averages. So it's got some room to bounce up. So I would expect some chop, some oscillation as these narrow. And again, we saw that resistance around the 434, support around 420. So I expect some chop until we determine a stronger direction there. NASDAQ Qs. Very similar, although it's looks like it's trying to break through that shorter term resistance. See that doji looks like capitulation there at that previous week, and then a bounce up, resistance at that moving average. So again, we'll probably see some chop, some testing between those levels before it decides whether it's going to break down further or break out. Dow again broke down below that shorter term moving average, severe decline, kind of a capitulation, then a bounce back on Friday. So again, I would expect some resistance at that moving average until we get some more decisive volume coming in. Okay, IWM, the Russell, getting a little bit weaker. Broke down pretty significantly. It's got some support at that 160, 167 area. Looks like that provided some support. Again, on Friday we got a rebound, but again, I would expect some retesting of these recent lows and then a possible correction back up. As you can see, we're getting some pretty steady oscillation in IWM. Again, if you're a shorter term swing trader, you want to swing trade the Russell, it does look like it's oscillating up and down, and that may give you some short term swing trade opportunities in the Russell index as a whole. Welcome, Alan Krantz. Thank you for joining us. Hope you're doing well. So we saw the VIX did pop up, broke above 20 very briefly, and then pretty quickly retraced. Last I saw it was in the 17s again. So it did break above 18, held above 18 for a little bit, tested above 20, failed, came back down pretty quickly below 18. You can see the trend, the near-term trend is pretty much upward. So if we look at the daily in the VIX, we can see that upward trend, testing 20, failing, probably get support at 18, retest 20. So again, the trend is upward now in the VIX, so increasing volatility. And as we'll see, we've got some economic data that may give some pops in the VIX, but these pops, again, tend to be pretty short-lived. So when we look at ETFs, we've talked about volatility ETFs are quite often, And right now, the leveraged long ETF we use is UVXY. The short is SVXY. There's a couple other short opportunities. Again, short-term traders, there's some pretty good opportunities trading volatility right now. So if we look at the groups, the sectors, the industries, again, Friday we saw that rotation back into particularly the mega cap techs, the FANGs. We saw a recovery in basic materials. Utilities got a little bit of a bounce as well. So pretty much everything except consumer defensive. So it was a risk on towards the end of the day. Definitely a reversal from right after the jobs data, which was pretty much a risk off. So it's interesting. The market, as we saw in the SPYs and the NASDAQ, it does want to pop, keeps trying and failing. So we've got profit taking in general. So on any pops, watch for that profit taking and resistance. So again, technology, communication services for the week were strong in general. Energy was the worst performer. Again, we saw oil break down. Real estate, utilities poor, defensives poor. For the month, again, real estate, utilities, the worst performers, energy kind of in the middle. The only positive was communication services, and that was previously one of the weaker sectors. If we look at the industries from Friday, see some of the materials, again, we'll see that rebound in silver. Solar got a little bit of a rebound. Semiconductors got a little bit of a rebound. Uranium rebound, although we saw previously the uranium stocks kind of hit a resistance level, peaked out, rolled over, but they did get a bounce on Friday. Again, there's some short-term opportunities in uranium, but again, we saw that roll over, so the trend, is kind of reversed and is now trending down. Again, the weakest, some of the REITs. Again, as the yields in the 10-year go up, mortgage rates go up, the general sentiment in real estate tends to be negative. I saw several of these REITs, and we'll see this tomorrow. And some of the REITs we're watching, they tried to pop, tried to rally, failed pretty. They tried to rally early, failed, and then declined through the rest of the day. So for the week, we've got some internet, some technology, semiconductors, healthcare. Again, uranium for the week was negative, REITs negative, coal, oil, solar, negative energy. But for the month, coal was very positive, uranium positive. So again, we're seeing a reversal in those trends in energy. We saw oil roll over again. And solar, very negative for the month. Again, REITs. And there's the quarterly trend. And solar, very negative. Again, a lot of REITs in the negative. So as we've talked about, we'll be talking about, we're waiting for that bottom in the real estate sentiment. Also, utilities we've talked about, and a reversal, sector rotation into those areas. Okay, I'll bring up the economic data calendar in investing.com. I'll talk about a few of my notes from last week. We'll look at what's upcoming for this week. Let me grab a quick drink. Okay, from last week, Thursday and Friday, We'll look at also the JOLTS data. I believe that came out on Wednesday, but we had a lot of jobs data come out that caused volatility in the markets. So Thursday we got job cuts. You can see the job cuts for September was significantly less than what was expected. So there's fewer layoffs. We see initial jobless claims was below expectations. So again, unemployment, as we'll see, the unemployment rate coming on Friday is not going up. So again, the job market continues to be resilient. Continuing claims was below expectations. So again, people are finding jobs. The average is below average. So again, the message we can see repeatedly Thursday and Friday is the job market's still strong. So the Fed can fight inflation, raise interest rates without fear of high unemployment. So then on Friday, again, we got jobs data, government, or the overall jobs data was double what was expected, and that caused an initial negative reaction. So we see non-farm payrolls for September was about almost double what was expected, and so that caused an initial fear that, again, the Fed's going to have to raise rates. The job market's strong. But we see there's not a lot of wage inflation, so hourly earnings didn't go up as much as expected. It was interesting. Government payrolls went up more than expected. Participation rates steady. Private payrolls went up significantly more than expected. It's interesting. The U6 unemployment went down, and the overall just went up. Well, it stayed steady, but it was a little bit more than expected. So again, we're not suffering. The employment market's not suffering. So again, the message initially, the reaction was the Fed can be more hawkish, more aggressive in raising interest rates. And it was interesting that although that initially pushed the indices down, they did recover and then rally towards the end of the day pretty strongly. So I guess the sentiment changed from that being negative news in terms of a rate hike to being positive news that, okay, the job market's still strong, the economy's still resilient. Welcome to Ricky Khan. If I didn't see you before, thank you for joining us. So we'll look at some of the other economic data from past week and then what's coming up next week. So we see ISM manufacturing was a little better than expected. So again, overall economies continue to be resilient. We've still got Fed speakers talking. I don't think Powell really said anything of significance in terms of future rate hikes or interest rates going forward. But again, these Fed talkers tend to cause some level of volatility. Nestor, again, tends to be a little bit more hawkish. Got JOLTS. This was interesting as well, as job openings went up on Tuesday. So again, that caused a negative reaction in the market, as again that says there's people are still hiring, they're opening jobs, they're not reducing the number of open jobs. So again, typically that's not a significant volatile. It's got a rating of high volatility, so I guess it is significant market mover. And again, that was received negatively. So we had a downtrend through most of the week until we got to that bounce on Friday. So we talked about ADP. We've got mortgage rates again went up. Again, the 10-year, 20-year bond yields went up. Car sales pretty stable. Factory orders in August up more than expected. So again, positive for the economy, possibly negative for inflation. We got crude oil inventories dropped more than expected and more than the previous month. And we did, again, now see that the oil prices declined pretty significantly. Gasoline inventories, though, went way up. We talked about Challenger job cuts. Jobless claims. So vehicle sales, pretty stable. And we may talk about some of the auto companies tomorrow with what's going on with the UAW strike, etc. potential opportunities there. Rig count continues to go down. So again, they're shutting down rigs, trying to hold the oil price up. And although in this case now the oil price is going down and they're cutting rigs. So I expect that trend. They'll continue to cut rigs, try to hold the oil price up. We also had the OPEC meeting this past week, and they decided to not change their production schedule, at least at this time. Their next meeting, I believe, is November. So the OPEC oil supply expected to be stable at least till November. So we'll see if this downward trend in oil continues at this time. So we've got more Fed speakers on Monday. Tuesday, again, more Fed speakers. Get mortgage data. Then on Wednesday, we get PPI data. And this is interesting. Someone pointed out, and I think typically we get CPI data before PPI data. In this case, we're getting PPI data, which is producer data on Wednesday. And then on Thursday, we get CPI data. So Wednesday, Thursday, we'll get some volatility if these inflation measures, which are important inputs for the Fed's interest rate decision coming up, if they are different from expectations, that could cause some volatility one direction or the other in the markets. And then we get jobless claims data again on Thursday, so quite a bit of volatility data on Thursday. And then Michigan sentiment on Friday. So again, in some cases that has the inflation expectations of the consumer and their longer term sentiment indications have caused some level of volatility. So we'll keep an eye on that Wednesday, Thursday, Friday. Got a lot of economic data that could, move the markets. Okay, we'll look at the earnings calendar here at investing.com for next week. We might get some earnings starting up. Got some metals, PepsiCo. So again, we're just starting into the next earnings season. So we'll keep an eye who's reporting. These will be, the earliest Rite Aid. I guess it has some bankruptcy problems. So not heavy until we get later in the week, but again, we'll start to hear, and some of these could be leading indicators. So PepsiCo, leading indicator for manufacturer, also, snacks, sodas, etc. There's Domino's Pizza, so food. So again, some of these early reporters, may set the stage for subsequent stocks in the same industry. So it's important to watch for sentiment moves in stocks in the same sector industry. And then we got United Health, and we're going to start into all the financials on Friday. So again, the financial sector will probably, get some volatility based on how these perform. These are the majors, and then we'll probably have the regionals following after that. And there's concern, with the regional banks. Are we going to see more regional bank failures? And we'll see if we see any harbingers of that as these financials start to report. So again, just starting into the next earnings season, so it's worth keeping an eye on who's reporting, what sectors, and listening to what they say, particularly as an indicator for the sector as a whole. So we hope that helps. So again, reminder, the next FOMC meeting is at the end of October, October 31st. They'll make their decision November 1st. So a lot of economic data and speculation as to how that's going to input into their next interest rate decision in October. So again, we talk about, how to make money trading when earnings matter again. Again, we're just headed into this new earnings season. So I'd recommend, listening to that video in more detail about, how to make money trading based on earnings. Okay, let me grab another quick drink and we'll jump over to the market screen in Webull and see how the markets performed again on Friday. Welcome aboard to Be Free. Thank you for joining us. Hope you're doing well. Just a real quick reminder, if you're not already using Webull, they still offer up to 12 free stocks for opening and funding an account. They're also offering 5% interest on uninvested cash in your cash account. We use Webull for our market analysis, as you'll see, our due diligence, the majority of our trading. And if you use our affiliate link in the description box below to open your account with Webull, you also help support our BeachBum trading community, which we always greatly appreciate. So I'm using the online browser version of Webull. I like to use the market screen to do some additional market analysis. So this is the market screen in Webull. We have some videos about how to use this for market analysis as well as trading during the week. I like this histogram. We can see advancers, decliners. So again, on Friday, we see a significant more advancers than decliners. The majority were very small, quite a few unchanged. Not a lot of major decliners. See what the net inflows doing. So again, past couple weeks now, again, we're seeing inflows in NYSE and outflow in the NASDAQ, although it did pick up a little bit towards the end of Friday. Still a net outflow out of the NASDAQ, which, we've seen now again for the past couple weeks. So even though the NASDAQ index pushed up, again, I attribute that mostly to the mega cap tech FANG stocks. And you can also see the earnings calendar, the near-term earnings calendar here in the calendar section. So again, as we're just getting started in the next earnings season, you can keep an eye on for who's upcoming and what impact that might have on your trading decisions. Look at the best performing industries for the week. So construction, pretty positive. That's interesting given the negative sentiment in real estate. Some software. Global industrial. A little bit of retail. A little bit of education. A little bit of healthcare, and a little bit of semiconductors. So pretty selective, not a whole lot of positivity. Look at the ETFs for Friday. So up on the Qs, up on the NASDAQ, up on China. So again, China's been volatile. We'll talk about ETFs, you can use to trade China. Up on the S&P. So Dow up, S&P up, mid cap up. So we're not seeing either way small caps there. The VIX, short the euro. Not sure why that's in the VIX category. Short the yen. So again, yen's been very weak. So small cap bull, TNA, popular one. Up on the Russell, URTY, again, another popular one. Up on China, Europe. some mixture. Again, China's been volatile, so we've got a split of up and down on China and on Europe, and up on the Qs. In terms of industry, we've got industrials, communication services, utilities, energies, healthcare. Again, most of them are green from Friday. The only red sector on Friday was consumer defensive and some real estate and a little bit of healthcare. Commodities, again, natural gas has been running up. Silver bounced, gold bounced, silver. So again, nice bounce we'll see in the futures in silver. Again, natural gas running up, gold and silver. Three to sevens, high yield, REIT preferred. And pretty much all the currencies are looking for a rebound against the dollar. Again, the dollar was quite strong, did weaken a little bit towards the end of the week. Again, that should provide some tailwinds for your dollar-denominated commodities, etc. So hopefully, if that trend continues, some of the commodities will recover, and we'll see that again in the futures. Okay, we'll look at the futures in FinBiz. Again, we see that rebound in all the indices at the end of the week. So again, pretty negative trend, and we'll talk about, this trend extending. We saw this trend all through, pretty much of September, and which is typical. The historical trend in September is that it's the worst month, and then we get a rebound in October. Although, again, we'll talk about the October effect and how this tends to bleed over into October. So again, we see a rebound in all the indices. NASDAQ's got, some room to run up or to, rebound and test back down. Same thing with the S&P. Looks like it about tested that previous peak and then got rejected. Big candle in the Dow. We'll probably expect some correction there. Russell, again, looks like it kind of bottomed, bounced. We'll see if it retraces and tests that bottom again. Nikkei had a bounce. Euro stocks, again, everybody bounced on Friday, but they were trending down. Nikkei had a big drop. Same thing with the DAX. We saw that trend in the VIX, popped up over 20 very briefly and then retraced pretty quickly back below 18. So we'll see if it can hold that 18 level and make a push again to test 20. See that breakdown in oil. Again, it tested 95, failed, and then broke all the way down. 90 didn't hold very well. 85 didn't hold very well. So now I would expect, a test around 80, probably a bounce there. And then we'll see, if it trends back up like it had or if it breaks down further. See that run up in natural gas recently, pretty strong, pretty dramatic. I wouldn't be surprised some retracement given the strength of that run up. But again, the longer term trend now in natural gas is upward. So we've talked about, the ETFs we use to trade these shorter and longer term. You can see a lot of volatility there. So BOIL is the long on natural gas, cold KOLD, the short on natural gas. Again, pretty volatile recently, so be careful. See that bounce in gold. Again, it had broken down below 1850. We'll see if it can regain that 1850. It does look like it's bottoming and swinging back up. Saw a more dramatic bounce in silver. So it tested 21, bounced off 21, and, bounced pretty well. So again, we'll see it, that had a pretty dramatic drop for a while. Same thing with platinum and palladium, not as dramatic a bounce. Corn swinging up. Looks like wheat finally found a bottom, slowly trending up. So again, we're still long wheat with the WEAT ETF. There is a corn ETF as well. See lumber kind of rolled over. And we see that, steady decline in the treasuries, made a brief bounce, saw yields briefly decline, and then on Friday again, yields went up, prices went down. See that rollover in the dollar, broke above 106, 107, and then rolled over back down below 106. So a recovery in all the other foreign currencies on that rollover in the dollar. So again, we'll see if that trend continues and the dollar continues to head down for a while. And if so, we might get, again, a tailwind in some of the dollar-denominated commodities. So I hope that all helps. So again, plenty of opportunities, and we'll look at our ETFs we have available to play these opportunities. Again, I think, right now the opportunities are more for very short-term trades. So your day traders, your scalpers, if you're nimble and can take advantage of some of this volatility, you can make good money. So we'll go ahead and look at our ETFs. Just a quick reminder, as we identify these opportunities, like in the futures, looking at the market screen, etc., if we see an extreme to either long or short any of these commodities, indices, etc., then we should tend to look for ETFs that we could play that trend. And so we use our ETF Google Sheet to identify the ETFs with the best risk-reward profile to play either long or short that topic. And if you would like access to these Google Sheets, including our ETF Google Sheet, our dividends payers, our puts, ROIC Google Sheet, you can get 24/7 access to those by joining our Patreon at the all access or VIP level. And again, also help support our BeachBum trading community. We also have a whole series of videos related to ETFs, identifying particular categories, etc. And you can see those in our ETF playlist. So if anybody in the chat has a particular category you'd like to look at in the ETF Google Sheet, please throw that up. I'll try to, if I missed a topic, please throw it up there again. We'll take a look at those categories. I want to look at the screeners very briefly. These are the technology components. I thought there were some interesting trends in some of the technology components. And again, you can access this screener as well as several others in the screeners tab in our Google Sheet. Okay, I thought this was pretty interesting. As again, we saw this the strength in the FANGs, the mega cap techs. You can see how it's kind of the FANG U, which is the FANG stocks, is kind of hugging that lower trend line. We can see it's in a wedge, narrowing channel in a wedge. And again, it's chopping around that lower trend line. So I expect, volatility in the FANGs. We've seen that. They'll rotate in and then take profits, get out. And again, with that surge on Friday, I would expect, retracement. Again, short-term opportunities, FANG U, FANG stocks up, FANG D down. And again, we're in a narrowing channel. We see that in the FANGs. We see that in SOX, the semiconductors. So although the trend in semiconductors is trending down, it is chopping around that pivot point. So again, it's very short term, short volatility, not any, in my humble opinion, not any good trends to swing. But again, if you're day trading, scalping, you can play these reversals, this chop, and make some money. Same thing with the NASDAQ as a whole, TQQQ. See how it's hugging that lower trend line. Again, the trend channel is down, narrowing somewhat, but again, it's just kind of chopping around with good support at that lower trend line. So again, short-term choppy scalps, good opportunities in those areas. The biotechs did get a little bit of a bounce, but you can see how weak that is overall. So again, my humble opinion, I would be more careful. Again, you can make very short-term trades, make money with Lab U, Lab D, but again, biotech in general is pretty weak. So I hope that helps. Okay, so before I miss it, I see Easy Mike is asking about jets. Yeah, I was interested in airlines. We saw some weakness for a while in airlines, so you can kind of see where Jets is relative to its support level, 52 week. It's got a pretty good short-term risk reward, but not a great risk reward from a swing standpoint, and it's still significantly above its 52-week low. So it's not showing up as one that I'd be interested in swinging at this time, but it was one we took a quick look at. You also mentioned IYT. I'm not sure if that's in here. Yes, it is. Again, you can see you can always do a find for a category or a particular ETF. So if you don't find it in the main ETF sheet, you can check the research tab. So if you just jump over there, the find will hold, and you can also see if we have done previous research on an ETF. So here's transportation in general. So we can see it's not really offering much in terms of a risk reward. It's significantly above its 52 week. Again, not a whole lot of risk reward until it gets much lower. Here's another one to consider, TPOR. So this is a bull, 3x on transportation. So that might be one you want to consider, Easy Mike and others, if you want a short-term trade transportation. TPOR seems to offer a little bit better risk reward. Again, it's still significantly higher than its low. So again, a lot of risk, but pretty good reward. Again, short-term trades could be an opportunity there. OOTO, yeah, another travel and vacation. So again, if you're looking at transportation, travel, those are a number of ETFs we have, and you can again monitor the risk reward profile, the prices, etc., using our ETF Google sheet. Here's one I wanted to point out, a new addition to our ETF Google sheet. I heard about this. I think it was a ETF guide video. There's another leveraged ETF to play technology. So we'll look at the description for this guy in a second, but you can see it offers a pretty nice risk reward profile. Again, it's pretty high right now, but as we watch the technology sector, so I'll bring that up quickly in the ETF database. So 3x leverage, technology. We can look at the holdings quickly. So again, you can access the prospectus for okay, so that is the holdings. So it's got Apple, Microsoft, NVIDIA, so a lot of FANG stocks, Cisco, CRM, software, Oracle, AMD. So it's a mixture of semiconductors, FANG stock, software, etc. So again, kind of broad technology. So again, another way to play the technology sector with leverage. So I hope that helps. And again, you can see it has a pretty nice risk-reward profile. So we've added that one to our ETF spreadsheet, and it tracks, essentially the XLK, which is the sector spider, and it's a 3X, so it's a leveraged ETF. If you want a short-term trade the technology sector, that may be a nice way. Again, nice risk-reward profile. So we talked about Lab U and Lab D. Again, Lab U is still, above its 52-week low, but getting pretty low. But again, biotech kind of weak. I've been watching MJ and MSOS to see if they retrace, see if we get a swing back down after the run up with the, Fed banking cannabis legislation caused a run up in those. Again, trade China, long yen, short yang. Again, it's been choppy. So short-term trades, day trades, etc. Always opportunities there. Coal, been watching METC, one we've traded before. Again, all these are still above their support level, above their 52-week low, even though they had a decline. We don't have an ETF to trade coal, but if you're looking for some, here's BTU, METC, NC that we've identified before as potential candidates. Been watching BDRY, one we swung earlier. It's still a little high. Europe, we've got, several to trade Europe. Up and down, we've got some videos on these topics. And FANG D and FANG U, plenty with gold. If you want to play the bounce in gold short term, our preferred is the leveraged ETF GDXU. Long, you can see this dust short, has a nice risk reward profile. If you want to hold gold and get a dividend, since gold doesn't really have a yield, we hold GLDI and collect a nice monthly dividend on gold. Silver, similarly, we use AGQ short or long. AGQ long, it's a leveraged long. If you will catch those bounces in silver, had that nice bounce on Friday. If we get a retracement, you want to short silver. We prefer ZSL. You can see the risk reward profile on that. Talked about natural gas, oil. So again, cold boil long, cold short. You can also play UNG, UNL, oil long, gush or UCO, short drip or SCO. If you want to play palladium or platinum. We're going to talk about this one tomorrow again, DRN. Again, we've been talking about this negative sentiment. We saw the negative trend in real estate for quite some time. You see DRN's getting pretty close to its 52-week low. We see that reversal in the real estate market in general. We're watching DRN for that reversal. And then there seems to be, a pretty nice risk-reward opportunity in DRN, playing that leveraged in real estate in general. Now, a number of these, be it treasuries, real estate, utilities, etc., we may have to wait for the end of month Fed interest rate decision, as if they do hike another 25 basis points, that'll have a negative impact on most real estate, on the treasury prices as yields probably go up, and also the attractiveness of utilities declines as, again, interest rates go up. So look at treasuries and utilities just very quickly. So again, we've been watching TLT. TLT's been generally declining. So you can see it's just above its 52-week low. It's been making, decade level lows repeatedly. So we're watching that, and then we'll talk about the dividend payer based on that, just TLTW again tomorrow. So, again, we're watching for that bottom. There's opportunities with TLT. Use the leverage TMF. You can use the dividend payer TLTW. And again, we'll take a look at that again tomorrow. But again, we may not be at the bottom, particularly given the potential for a Fed interest rate hike again at the end of the month. Same way with utilities. We're watching UTSL. Again, we'll look at this tomorrow. Generally trending down. It's based on XLU, which is the sector for utilities. And again, the sentiment was severely negative. We'll see if we've reached a bottom there, and if so, we could swing utilities using UTSL. Again, volatility up UVXY, down SVXY or SVIX. Could also use VXX for short-term volatility up. Again, we're long wheat. You can see the yens. I've been looking at these as well. So just above their 52-week, but the risk-reward profile for a swing isn't all that attractive. But again, you could use these ETFs for short-term trades. Got a pretty decent risk-reward profile on very short-term trades. So we hope this Google Sheet helps you identify ETFs you could use for whatever your trading style is. You can see the different time frames and the risk-reward profiles with the associated time frames. Also, which direction it's headed with the low and high for the day, etc. And again, all these columns, these are price columns, are based on Google Finance functions. They're not truly real time, about a 20-minute delay, but in terms of trends, swings, etc., it's pretty useful. Okay, if anybody else in the chat has another ETF topic you'd like to look at, please throw that up. Otherwise, we can continue. Just quickly to get to our strategies, our topic for today, how to make money trading in October. We've released a number of videos on short videos on how the markets typically perform in the month of October, what are typically the best performing sectors and industries in the month of October. We also have a previous video that explains what the October effect is and why there's typically fear of a crash in October. You can listen to that video about what is the October effect and why people often fear crashes in October. You'll see other people making videos about, a crash coming. And the reason being is that, many of the major crashes throughout history occurred in October, but you'll also hear the thesis that a lot of that tends to be based on the downtrend in September. So if we look at our typical monthly chart again, and again, you can find all those links in the notes, and you can also find links to those videos in our BeachBum Trading YouTube channel. So again, we see typically September is the worst month of the year. Then by the end of October, we get a rebound. So September negative 0.5, October tends to be positive 0.9. And I think we saw this past week, because I think we saw the negativity of September bleeding into the first week in October. So we'll be looking for that reversal and see if we can follow this historical trend and get this rebound in October. Again, it may not occur, until the later half of October. Also sectors to watch, and you'll again hear this in this short video, is energy. As we're headed into the winter, we expect energy as a whole. You can see the recent downturn in energy may give us an opportunity to swing that back up towards the end of October. So again, the downtrend in September tends to bleed into October. If we do get one of these fear-based crashes, I heard again the fear and greed index was at extreme fear. So, given this typical decline in September, and we had a pretty significant decline in September, the sentiment's very negative. We'll wait for that turn. By the end of the month, the historical expectation is to be positive. So We'll wait for that turn. We'll patient. Our theme is Patience Pays in the stock market. So, we're not making a lot of trades right now, longer term swing trades, and, we'll be waiting for that a reversal swing back up, wait for sentiment to shift. You can also hear our strategies about how to make money trading in the fall. So we're now in the fall quarter. So you can hear how sectors and industries typically perform in the fall. And I've also put back in these links to the videos we've done before about how to make money trading with a strong dollar. Again, the dollar is 105, 106. So we've talked about impacts on the dollar denominated commodities, etc., and some strategies for how to make money with a strong dollar. So I hope that all helps. So again, tomorrow we'll talk about dividend-paying stocks. We'll look at some of those that people in the chat have thrown up, treasuries, etc. And we'll also talk about our options trading strategies. So in the last couple minutes, if anybody has any questions, comments, topics you'd like to talk about, please let me know. I'll grab a drink and we'll see if we can address any last-minute questions. Just a quick reminder, if you do have any questions, you can put them in the comments to this video. We also have a free Discord. You can see one of the channels I post the economic data in is the Surf the Markets channel. Our Discord is free to join. You can find a direct link in the description box below. Also, you can find a link to our free Discord as well as our Facebook group, our Reddit community, and all of our social media sites via our homepage, beachbumtrading.com, bum without the U. So again, many different ways you can ask us questions. We'll try to respond as soon as we're able. So we'd also love your suggestions about how we can continue to improve our weekly trading game plans, all of our videos and content, our Discord community, etc., and our tools and resources so we can add more value for all of our BeachBum traders. So we'd love your feedback. Let us know your suggestions. We also have a suggestion box here in our Discord. You can put your suggestions for improvement here. And again, we greatly appreciate the feedback, and we'll do what we can to accommodate and make those improvements as soon as we're able. So again, thank you everyone in the chat for joining us today. We hope you all come back tomorrow, same bat time, same bat channel, 10 a.m. Eastern on Sundays for part 2 of our weekly trading game plan, where we'll be selecting our top swing trading stocks to watch, stocks in our bullpen. We'll talk about our shopping list. We also got some ideas. So we'll talk about our options trading strategies, some additions to that, and some possible candidates in the future that we might want to keep an eye on. So again, we hope to see you all again tomorrow, 10 a.m. for part 2. And thank you again for watching, and have a great day.